Hi guys, welcome back. Last week I shared the video about LKCO. I did not share what I think about the price action. So in regards to the price action, it has broken out to the consolidation of this triangle. You see, ever since February we were in this triangle and then we broke it out last few days ago. For now, out of a lot of stocks that went together in the heavy correction since February, LKCO is looking more healthy than a lot of the other small caps because it has continued to make higher high so far and has not broken out this 120-day moving average. Especially it has some final shaking here, making a golden dip last week. So from a technical standpoint, it's usually a good sign. So why do I think this day was a golden dip last week? So it was April 14 when my Discord member asked me what is the support of LKCO. I said after 1, next support is 0.88. On April 14, it was this day when it dropped from 1.1 to 1. To show you more proof, this is the chat I did with my friend on WeChat. It was on April 19. I said that if LKCO dropped to 0.88, I'm going to buy some of my shares back because I bet it's gonna make a golden dip. And April 19 was on this day when it moved from 1 to 1.06. And then we saw that next day, it did a quick dip to 0.88, the lowest. If we open the 5-minute chart, it was April 21st when it dipped to 0.88 and quickly bounced back up. And then after that, it just kept running back up. So that would make that really looks like a golden dip because it quickly dipped there and then continue heading north after that. So if it quickly dipped there, making a golden dip, I would think it's a good sign because what it does is that it shakes off the last panic sellers before it started to move back up, while it just quickly broke the support of $1. So why did I think 88 cents was the support? Because if we open the 5-minute chart and we zoom out, see, it was back then here when it slightly and quickly dipped to 88 to scare and shake off the last panic seller before pulling back up. So it was back then in March, the beginning of March, when it was dropping all the way from the top to as low as 70 cents. There were a lot of panic sellers and frustrated sellers who sold off because of the fear on the market. And right away when people cut loss, it jumped back up so quickly because of the hearing that was going on for Xiaomi. The news just pushed the share price break out of this long time downward trend. I remember at that time in the Discord, I shared this breaking out. I said it's good news, we see it finally breaking out. And on that day in the video, I said that don't be surprised if it backtests the downward trend after breaking out. And then the next day it did exactly it quickly within maybe just 1 minute. Slightly dipped there and you can see this curve here. It went quite fast for the dip because after the big run up that day, a lot of people who panic sold were hesitating whether they should buy it back, whether they made a wrong decision. And a lot of people who were on the side also were thinking whether they should buy or not. And for the people who bought in, I think they would like to set a stop loss after such a painful experience, seeing it dropping all the way down. So people were quite fearful that it can continue breaking downwards and make lower lows. And that's why on that day, people were still having fresh wound. And that day, seeing the share price to consolidate around $1, I think a lot of people might put a stop loss there. So this sharp curve can trigger a lot of stop loss to begin with. And because it's very quick before the closing, so people may not have too much time to think and just sell quickly within a few minutes. So within this panic, who have bought the dip? To be precisely on the support line here to catch the falling knife. So that is why I think the institution cost was around 88 cents. So I thought if they need to do a golden dip, it should be at least above their cost within this range at 88. And if it breaks the support here, that would not be a good sign if it doesn't recover well, if it's not just a quick dip. So that's how I got the support level here. You see, on this day, March 10, the closing price at 15.55 and the low was 88 cents per share. And then there was another good sign, which was yesterday in the morning when it opened up. It had a quick dip to 1.19 here. It was very quick, and within a few minutes it jumped back up. It was yesterday, April 28 in the morning. And yesterday morning, I showed this on my Discord, which I set up the automatic order on the day before, April 27, to buy at the limit of 1.19, and it did not go through. So I see it as another good sign here, because it means people are fighting for shares and they don't let me grab the share at the cheaper price. So it might be a good sign, since 1.19 was the support of this gap up and also the previous high. You see, important support as well for now. So now the resistance level would be first all the shares that were trapped here. A lot of people bought it here. As you see, the volume is much bigger than here. So let's see the average price up here. It's 1.44. It's around 1.6. You see, right now we are getting rejected at this moment on this level around 1.36, because it was a lot of people who bought here and here. We're all trapped. So between 1.4 to 1.6 you have some resistance, and to zoom out you have more people who bought in at the top here that were trapped. You see, compared to the volume here, and right now makes the volume now looks like nothing, right? So a lot of people who bought in here were trapped. Let's see the average price here, around 2.18. So that means the average buying price in this range here would be average 2.1. So that would act as a resistance. So that's why here we can see that it reached as high as 2.1 back in March. You see, the highest was 2.1 here. That's another resistance once it breaks through 1.4 to 1.6. So here, I have given you the chart analysis for LKCO, and you know my thinking process. When I look at the chart, I don't only look at the technical analysis and all the indicators. I think what's more important is the psychology behind the chart, and you can now use the support and resistance. So now you know my analysis on the support and resistance. To me, I think the most important is 88 cents. If it does break through this support, that would be a concern for me. So that's why if you are worried about the result of the hearing, you can use the support line to set stop loss to protect your holding or lock-in profit if you want. With that said, I am with you guys. I'm also very much looking forward to this hearing. I would be watching closely on this with you guys all together, and let's hope for the best. I do think right now the EV industry is for sure a no-brainer. And yet, we have seen all kinds of segments that have been hyped up at some point with the market. Not just the EV brands like Tesla and NIO and Xiaopeng, but also LiDAR, charging stations, new energy, etc. related to the EV industry, and also autonomous drive. But we have not yet seen HD map that has been hyped up yet, and it's so related and so needed for EV and autonomous drive. So we do see opportunities in the HD map sector in the future. We don't know when, but we'll see. But overall, I think LKCO had been having a great run up recently, and it's mostly because it's driven by the expectation on the court. Right now, we're still in between the sector rotating. A few days ago, it was a lot of the mega cap running fast for the expectation of the earning. And recently, it's been rotating to some medium caps, especially the popular one. So a lot of the penny stocks, the small caps, micro caps, are still lying down on the floor. For example, look at WIMI, it's still on the floor. Even EH has not passed the medium line yet, while LKCO has passed this with a strong gap up. mainly because it's the last week towards the hearing and there are a lot of speculative investors or short-term traders who got in within these few days. So after the hearing next week, we should expect some sell the news action happen first. And if so, the support line would be quite important, especially the 88 cents, which I explained just now that it's the cost of institution. So if it fall back to that price and they let you pick up the share, then you need to have a second thought about that. But for now, we still have the support here at 119 and then at 1. Anyways, I just think it's too early to get too excited because it was a run-up driven by the expectations, speculations. So we should not expect it to keep growing like this. On top of this, we still have a lot of resistance to go. Some people think because they have good technology, so that's why their share price should explode anytime. Well, it doesn't necessarily work like that. Well, they've got great technology back then when they were 36 cents too. And it was just a few months ago, last year, and they were not even blacklisted by the US Defense Department yet. And even so, it was lying down on the floor for a year. So the share price doesn't have to make sense all the time. But if you believe in this company and the technology, you just gotta be patient. At least right now, I do think the HD map for the autonomous drive would come into the picture sometime in the future. As I said, it has not been hyped up yet, while a lot of the other sectors of autonomous drive has been hyped up. And also the smart city is completely under the shadow. I don't see anyone mentioning it. It's still quite early. It's got the future ahead of us. So that's all I can say for now. Now I hope you find this video helpful. And you can also use this way to analyze other stocks, other companies. And if you have enjoyed this video, please give me a big like and write me a great comment. And I will see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.